Co-Chairman of Taxation Committee, Mr. Anil Sathe, Conveners of Taxation Committee, Hardik, Vishesh and Divya, and myself, I extend a warm welcome to panelists of today's session, Mr. Soumya Ghosh, Mr. Deven Choksey, Mr. Shariq Contractor, and moderator for today's panel discussion, Ms. Sonal Bhutra. Friends, a simple truth of life is, we will never have a today again. The sad truth is befitting today's date, 22/02/22. So it's a Tuesday, a rare and unique date. So is the today's panel discussion, which is unique for the reason that we will not discuss only tax, what we normally do, but we will discuss on economy and capital markets too, with a relaxed mind as the uphill task of uploading of tax audit report is finally over. The budget 22 has brought some unconnected and discrete changes, which will have far-reaching impact on economy and capital markets, along with ambition to encourage voluntary tax compliance and reducing tax litigation. To share the views on same issues and many other issues, and also to understand the impact going forward of many positive measures like focusing capex boost and transformative approach for economic growth. We have a very balanced panel, and all the three learned panelists we have with us will share their viewpoints on various issues emanating from this budget, from their vast experience they have in their respective field. To moderate and make this panel discussion more interesting, we have with us Ms. Sonal Bhutra, who anchors many shows at CNBC TV 80. I am sure with her presence, we will witness a very exciting discussion ahead. So I'm sure all eyes and ears eagerly awaits the session wherein we have 2 + 2 luminaries with 2 CAs and 2 non-CAs. It's also a 2-hour session. I would end with a wish of getting 2 tips from Deven Bhai and would request Abhay to share his introductory thoughts. Abhay, over to you.
Panelists for the session, Mr. Soumya Ghosh, CA Shariq Contractor, and Mr. Deven Choksey. Moderator for the session, Ms. Sonal Bhutra. Vice President CA Mihir Sheth, Chairman of Taxation Committee, CA Deepak Shah, Co-Chairman, CA Anil Sathe, Conveners of Taxation Committee, Vishesh and Hardik, and all others assembled virtually. A very good evening to you all. I am really excited to have you all at this panel discussion where we shall be provided insights to the impact of Budget 2022. This discussion is not just restricted to taxation, but will provide a 360-degree view with its impact on the economy as well as on capital markets. It is all the more interesting as the panelists who are here to decipher and analyze impact of budget from all these 3 aspects are leaders from their respective fields, and their views are sought after. It will be much more engrossing. It will be made more engrossing by the moderator who has hands-on experience to extract the maximum value from the panelists through pertinent and relevant posers. I do not want to give any insights on the budget, but will eagerly look forward to enriching 100 to 120 minutes of deliberations so as to be wiser at the end of the session on the Budget 22 provisions. However, before I hand over the proceedings further, for the benefit of the non-members attending this panel discussion, I would just highlight that BCAS is the largest voluntary professional association of chartered accountants with its motto of disseminating knowledge and empowering small and medium practitioners. I strongly believe that if you have an urge to learn and share knowledge, then BCAS is the most relevant forum for CAs to be associated with. I urge you to visit our website and surf through the resources and events. This will provide glimpses of what is in store once you are part of BCAS as members. I now request Vishesh Sangoi to formally introduce panelists and the moderator. Thank you very much.
Thank you, Abhay. It's a pleasure to introduce the esteemed panelists and the moderator for today's evening. For the first panelist for today's evening is Dr. Soumya Ghosh. He is currently the Group Chief Economic Advisor of State Bank of India. Previously, he has worked at the Tata AIA, American Express, ICRA, among others. Dr. Ghosh has been one of the pioneers to capture the payroll data in India, and he is involved in the designing of the PM Kisan scheme for farmers and the ECLG scheme for MSME borrowers that have been very successful during the pandemic times. Dr. Ghosh also had a role in designing the Credit Health Guarantee Scheme that has been rolled out by the RBI. He's a member of the working group that has been set up by the Government of India for the revision of Wholesale Price Index. He serves as the chairman of the Indian Banks Association Economist Group and is also a member of the SEBI Advisory Committee on Research, Insolvency Board Committee on Research, Economic Advisory Council, and Editorial Advisory Board of the Indian Institute of Banking and Finance. For 4 successive years ending 2021, Dr. Ghosh has been ranked as one of the best individuals in research in India by the Asset magazine. Dr. Ghosh has completed his doctoral thesis from the JNU University. With this brief introduction, I would like to welcome Dr. Soumya Kanti Ghosh.
Thank you.
The second panelist for today's evening is Mr. Deven Choksey. He is the promoter of Choksey Group of Companies. As we all know, Choksey is one of the most trusted, respected, and distinguished names in the India's financial market for close to 4 decades. Mr. Choksey has been instrumental in transforming Choksey into a full-service wealth management institution from a modest brokerage service provider. Mr. Choksey is qualified with a distinction in commerce and accountancy with academic training of CA. He is an alumni of IIM Ahmedabad, having undergone Advanced Management Development Program. Mr. Choksey has indispensable experience in the capital markets. He is a distinguished market voice across business media channels like CNBC, TV18, ET Now, and various other regional channels. His views are regularly quoted from Wall Street Journal to almost all business dailies in the country. He is also an active member of the CII's Finance Committee and has served BSE as the director of the exchange and as a board member of the BSE Derivative Stock Exchange. He has also served exchange as a member of the Finance Committee and has had several positions, particularly in the area of technology, and has developed trading, online surveillance, and back office platforms for stock exchanges. With this brief introduction, I would like to welcome Mr. Deven Choksey. The next panelist for today's evening is Mr. Shariq, Contractor, a popular face amongst the BCAS members. Mr. Contractor has been a merit holder in CA final as well as his intermediate examinations. He joined as a partner in the firm HM Contractor and Company Chartered Accountants in the year 1982. Thereafter, he has established the partnership firm of Contractor Naik and Krishnadwala through the merger of 5 firms, which is currently operating under the name CNK & Associates LLP. Mr. Contractor specializes in strategy, business restructuring, valuations, mergers and acquisitions, foreign collaborations, inbound and outbound investments with emphasis on non-resident taxation. Mr. Contractor was the chairman and independent director on the board of BNP Paribas Trustee India Private Limited from 2004 to 2018. He was the chairman on the board of INA Group, an international association of independent professional accounting firms. He has been the president of Bombay Chartered Accountants Society in the year 2002-2003. He has been the editor of the prestigious Diary Cum Referencer published by the Bombay Chartered Accountants Society, and he has been a co-author of various publications which have been published by the Bombay Chartered Accountants Society. He has written several articles, presented a number of papers, and has been a speaker at various platforms and conferences. He was on the managing committee of the Wellington Sports Club and is on the finance committee of Bombay Gymkhana. With this introduction, I would like to welcome Mr. Shariq, Contractor.
Thank you, Vishesh.
The moderator for today's session, Sonal Bhutra. She is a chartered accountant and did her graduation from HR College of Commerce and Economics in Mumbai. At CNBC TV18, she dons the hats of a senior research analyst and anchor who tracks oil and gas, chemicals, real estate, packaging, and plastics. She anchors popular shows like Power Breakfast and Midcap Radar. Sonal takes a keen interest in environment and covers the sustainability and climate change theme too. She has worked earlier as a tax consultant with Ernst & Young and also tracked pharmaceutical sector with Motilal Oswal Financial Services as a research associate. With this brief introduction, I would like to welcome Sonal.
Thanks a lot, Vishesh.
Sonal, I would like to hand over the mic to you. Thank you.
Thank you. Thanks a lot, Vishesh. And I'm really looking forward to this interesting conversation. As everyone has been saying, it's a perfect combination of economy, taxation, and markets as well. All three of them very interesting. And we have some great experts here on the panel. So we'll not waste any time and get started with this very interesting panel that I am looking forward to for sure. Mr. Contractor, I would like to begin with you because, you know, whenever budget happens, for sure, for chartered accountants, it's amendment kya aaya hai. And, you know, that is what everyone looks forward to. But this time around, it being the shortest speech, what did it do for amendments? What do you think were the announcements, proposals, which you were anticipating didn't come through? And what did you make of the budget overall as far as taxation is concerned?
Yeah, thank you, Sonal. And first, before I begin, I thank the organizers for giving me this opportunity to speak, and I'm really looking forward to this session. You mentioned that, you know, everybody looks after the finance bill about what has happened in the taxation. But my personal take is I'm hoping that someday BCA will organize a program where they will talk about the capital markets, they will talk about the finances and about the economy and about what the budget is and expenses are. But they will say there is nothing to be said about the finance bill because the finance minister made absolutely no changes to the finance bill. I'm waiting for the day when the finance minister gets up, makes a presentation about the expenses in the budget, and then sits down saying no changes made to the finance bill. Unfortunately, that does not happen. You rightly mentioned that in this particular budget speech, it was one of the shortest, and people commended the finance minister for a short speech. But it had 83 clauses that were amended. And I think that is the problem. Year on year, we make changes, we keep tinkering, and most of the changes are made with a remark that it is in order to rationalize the tax structure. I mean, it would almost indicate to an outsider that the tax structure must be so irrational that it needs rationalization year and year on. So I think that's my first take on it. The important and amendments that have been made to the finance bill are far and few, but I think this bill, this particular budget will be known for the overwhelming priority that has been given to the capex expenditure spending. Almost 35% increase whopping expenditure has been put on capex, and the fiscal deficit has been projected at 6.4%. which means the finance minister has sort of given thrust to growth and has taken a risk on the inflation taking place. And I guess that's the reason there are no big bang changes in the Finance Act, because really already there was a big budget deficit. She could not possibly have given further giveaways to the taxpayer. In tax parlance, as I said, no big bang changes, no change. We expected that the threshold would be increased, the rates would be reduced, maybe the standard deduction would be increased to some extent, some benefit for work from home kind of thing. Nothing of that sort happened. The only one big change in the rates was that on all kinds of capital gains, the rate was capped at 15%. Earlier, as we know, 15% cap was available only to capital gains arising, long-term capital gains arising on account of sale of listed equity and equity-oriented mutual funds. Now that has been extended to all kinds of long-term capital gains. But other than that, there are no big changes, but number of changes, 83 clauses amended in the name of rationalization and so on and so forth. And what is really worse, and I think very worrisome, is that the number of changes that have been made that are retrospective in its application. And that is a little worrying. And a lot of these amendments have been made with the words that the new clauses or the words that we are inserting are explanatory. And the words used are, and this has become a common language that has been used across so many amendments, that these words are deemed to have been always included in this section. So what happens is that the tax officer get a handle to say that we will apply these clauses retroactively, even if they are not retroactively applicable in the Act. The courts have ruled it down, but that is a possible way of taking it. Let me just explain a few key amendments which have been made retroactively. We had section 14A, which talked about if you have exempt income, then expenses incurred to earn that exempt income would be disallowed. Now, a number of courts took a view that if there is no exempt income, then there is no question of disallowing any expenses, and those expenses could be claimed against the other income of the assessee. Now, the government has made an amendment with effect from 1st April 21, which means obviously 11 months ahead, to say that even if there is no exempt income, expenses which are relating to earning that exempt income would be disallowed. And this has been again done with the words, the dreaded words, deemed to have been always included. And therefore, it's possible that the tax department may seek to try and apply them even backwards. So that is, I think, a worrying part. The other important backward amendment is relating to expenses incurred for a purpose which is an offense or is prohibited by law. Now, this was always the case. Section 37 always said that expenses which are an offense or prohibited by law would be disallowed. And there was an explanation explaining this particular provision. Now, this year we have a unique situation where there is another explanation added to explain the explanation. So we have this confusing law that is happening and which extends the meaning of what is going to be disallowed. Earlier, only infringement of a law in India was disallowed. Now, if there is any law in force outside India would also be disallowed, which can be dangerous because, for example, a patent law may be no violation of a law in India, and an assessee may not even know it's a violation, but it would be disallowed. Similarly, any expenses incurred for compounding an offense would also be disallowed. And interestingly, there is a provision now added to say that if any benefit or perquisite is given by a company to any other person, then if the recipient receives that money, which is in violation of the law or of the regulations governing that person, then even that kind of expenses would be disallowed. So this is typically to cover the pharmaceutical companies. Earlier, pharmaceutical companies would be giving a benefit, a gift, or an incentive to a doctor, and the medical council had said that this is in violation of the ethical rules governing the doctors and they should not be accepting such gifts. The courts took a view that as far as the pharmaceutical companies are concerned, they can make those kind of gifts because there is no violation done by them per se. Now it is provided very clearly that if such gifts are in contravention of any law or rule or regulation or guideline governing the conduct of the recipient, then also it would be disallowed. Very wide words and it could be misused. In my view, such disallowance could take place only if it is governing the conduct of the recipient and it has got a force of law behind it, not just any internal guidelines issued. Then there is a question of assess, which is disallowed now. Earlier, we all know that the income tax paid cannot be considered as an allowable expenditure. Surcharge paid cannot be allowed as an expenditure. And there is now higher education cess. And the courts took a view that higher education cess is not specifically covered and therefore it can be claimed as a business expenditure. Now that also has been changed retrospectively with effect from 2005. There was Bombay High Court and Rajasthan High Court which had said that these expenses can be allowed. Some tribunals had relied on an old Supreme Court decision to say that this matter has been covered by the Supreme Court and that it should therefore not have been allowed. The government has taken recourse to that and has amended the law retroactively. Perhaps one argument would have been that you could have waited for the court to finally come to a conclusion in this case also that these expenses are to be disallowed and there was no need to make a retrospective amendment, but it has been done. But the worst retrospective amendment really is the one regarding the faceless assessment. When the faceless assessment came, they laid down entire procedure of how that assessment should be done. And those processes were to safeguard the interest of the assessee, give him a level playing field, and give him a fair hearing. And one of the clauses said that if this procedure is not followed, then the assessment would be treated as non-est. Now, this was a salutary provision because it put a certain burden on the officers also to follow the procedure laid down by the department itself, by the authorities itself. Now they say that no, because of this, a lot of courts have held that the assessment done by the officer is non-est because they did not follow the procedure. The finance minister now says that a lot of disputes arose because of this for technical reasons, because of the use of information technology, procedure was not followed and they became non-est. So therefore, that was a problem. So what do? They actually just remove that section and say, no, the assessment, even if it is not following the due process of law, will not be non-est. It will be a valid assessment. Of course, the courts may still take a view that natural justice has not been given to the assessee, and even if you remove that provision, it may not work out. But I think that is it right now. The other one or two more important ones are, I strongly feel this, that the finance minister in her budget speech has thanked the taxpayers a number of times. She's talked about building trust. Even if you look at the taxpayers charter, which has been put up on the tax office, they say that we would treat the taxpayers as honest unless there is compelling reason to believe otherwise. But look at the law. If I file my return and if I find I have made a mistake, I can rectify my return. So there's a process of filing a revised return. Earlier, 2 years were given for me to revise the return. Now that time has been condensed to filing a revised return by December. So if I file my return in October, I don't even have 2 months to revise my return. And if I have done in some cases, the time limit is November. It is completely unfair to not give a taxpayer enough time to rectify a bona fide, genuine mistake that he has made. And just say, because normally you would find your mistake next year when you're filing a return. And if the department has not detected it, I'm coming voluntarily to disclose that mistake, I should be given that amount of time. Unfortunately, that is not done so. And now they have brought in this new concept of an updated return. And the finance minister has mentioned that this has been done in order to provide the taxpayers with an opportunity to rectify their omission or mistakes. Is that really so? What does the section say? It says an updated return can be filed only if you are paying a higher tax or you are disclosing a higher income. If I have to reduce my tax liability or if I'm claiming some expenses which I had forgotten to claim, I'm not allowed to update my return. So it is completely unfair. And even the updated return has to be filed by paying the taxes plus an additional tax of 25% of the tax plus interest that you are paying now if it is filed within 1 year, or 50% of such amount if it is filed within 2 years. So it's a huge amount of liability, and I think it's not giving a fair level playing field, so to say. The other one that I will just touch upon it is the charitable trust. They have become the punching bag of every government year on year. And the law relating to charitable trust has become so incomprehensible that even professionals now struggle to understand that particular law. And there were two regimes. One was tax payable under the normal section 11 to 13, which was applicable to all charitable trusts. And then there was section 1023C, which was considered as a second and a more liberal regime. Now, year on year, they have made more and more changes to bring the two on parity. I think now the time has come to scrap 1023C completely because there is no meaning to it. It was applicable to to educational institutions, to medical institutions, and so on and so forth. So it is no point, it should be scrapped. And also charitable trusts are suffering because there is large powers taken for cancellation of registration. And if registration gets cancelled, the trust can suffer a catastrophic situation of losing their benefit and being taxed on the market value of their assets. So one has to be extremely careful on these things, and these amendments are also required to be done. Now, I'll just end by saying, yes, there are no big bang changes. There are a few good amendments, like, for example, extending the date for commencement of manufacturing by new manufacturing companies. The concessional rate of 15% was granted, and that date has been extended. The date for the startups has also been extended by 1 more year. A lot of new incentives have been given to the units established in the IFSCs, or what we call popularly the gift cities, and so on and so forth. To summarize, I want to complete it within I hope my 10 minutes, is to say that if the department wants to build trust, then I think they should give adequate time to the taxpayers to rectify their mistakes. And I would really urge the department to say, and then finance minister to say, don't keep changing the law in the name of rationalization. We already have a complex law, and if we keep changing it, we don't allow it to settle, and it becomes even more complex, needlessly becomes complex. And if at all changes are to be done, please do not make changes which are retrospective in their effect, except perhaps in the rarest of rare cases. I think these are, Sonal, my initial observations. Thank you.
I was hoping, Mr. Contractor, that this recording actually reaches the ministry, and in some way they do listen to the point that too many amendments, or the retrospective amendments that you're talking about, are as limited as possible. But we do take your point, and of course we'll come back to you with more questions on taxation. But Mr. Ghosh, let me come across to you. A lot has changed since budget as far as the macroeconomy or geopolitical concerns are concerned. Inflation has been the biggest risk. Even the economic survey spoke about it. Higher crude prices could be a risk. Do you think whatever budget was announced in the budget in terms of push for capex, all of that will be able to address the concerns that we are talking about at present? What were your key takeaways from the budget speech this time?
Yeah, thank you, Sonal, and I thank you the organizers for giving me this opportunity to speak here. The point regarding the budget is that I think the budget has been the announcements in the budget and the revenue numbers, expenditure numbers, when the basic numbers, when you look into it, all looks pragmatic and reasonable. Primarily the fiscal deficit number for this year actually at 6.9%. And if you just do a juxtaposition to see that what is the overall revised budgeted numbers for during a year, and if you just look into the fourth quarter mobilization as a percentage of revised estimates beginning FY16, we'll find that the revenue receipts in the fourth quarter of this year is only supposed to grow by 16.6%, whereas the average mobilization in the fourth quarter is around 34.4%. If you look at the history of the last 4 years, I am leaving aside the pandemic years because they have been exceptional. So that means that the fiscal deficit numbers for this year also looks conservative, and hopefully we'll be able to hit a lower target than 6.8%. And if that is the 6.9%, if that is the case, the next year fiscal deficit numbers could actually look even better, because that will come over a larger base. So this is the first thing. The second thing to note is that yes, the budget has actually the numbers for FY23 are also very reasonable and pragmatic, because it is working with a tax buoyancy of 0.9. The overall tax growth is at 9.6%, and the nominal GDP growth is at 11.1%. I think the nominal GDP estimates could be on the lower side, because the first thing is that it means that the government is working with an, even if it is working with an GDP numbers of 7.5 or to 8%, maybe it could be even higher than that, given the fact that a large part of the GDP growth in the fourth quarter and also in the third quarter, because we are seeing that the economy has been slowing down before the Omicron hit us. The third quarter numbers will be out next Monday. And also the fourth quarter numbers in January was actually a washout. February things have started to look up much better. So if we take that factor into account, so the next year growth rate could be actually higher than what the RBI is currently projecting, and also the government. But so if that is the case, the nominal GDP numbers of 11.1% could also be an underestimate. If that goes up to 12 to 13%, so that means the government will be having room to spend more on the capital expenditure, which is basically has been the focus of the government, the 35.4% push in the capital expenditure. However, I think we need to note that this increase in the capital expenditure also masks the thing that most of the off-balance sheet borrowing has been brought into the capital expenditure. For example, the National Highway Authority of India will borrow 65,000 crores from the market, and the gap between the overall public sector borrowings and the fiscal deficit numbers is actually now very less. For example, the overall public sector borrowing requirement number is at 7.7%, and the overall fiscal deficit next year is 6.4%. This gap used to be as large as 300 to 400 basis points 3 to 4 years back. So from that point of view, the expenditure growth is welcome. But it not only, but it also masks the thing that a lot of line items has been brought into capital expenditure, National Highway Authority of India. And the other thing is that, and I think there I will come into that very quickly, the capital expenditure also has a lot of rural infrastructure and their focus. For example, the Prime Minister Krishi Unnati Yojana, this Prime Minister, this rural road scheme. So all these, there's also a very large provision of the scheme, and which basically is also a part of the capital expenditure. So if we take that factors into account, the numbers look significantly larger. And in fact, this 35% growth is no surprise to us, because if you look at the overall national infrastructure monetization plan, if the center is a 39% share, if you look at this 111 lakh crore, the government has said that it will spend from FY20 to FY25, and the share of the center is at around 39%. That means that the center was supposed to will spend at least had to spend more than 7 lakh crores this year. But here I have 2 points to make before I come to this geopolitical issue which you asked me. The point to note is that I think the capital expenditure is actually pushing capital expenditure is always a welcome move, because it has multiplier impacts on the economy. And given the fact that the roads, transport, highways, 70% of this guzzle more than 70% of the capital expenditure, it will be positive for the economy. But let me remind you a small thing over here. I think after the pandemic has stuck, there has been a lot of changes in the macroeconomics policy orientation. I think if you remember from 2008 till 2021, the monetary policy, we had been significantly continuously pushing. I mean, there has been unconventional monetary policy, and the US and the advanced economies have been continuously trying to push the inflation rate over 2%. And finally, it has happened, and it has happened at the breakneck speed in the last 3 to 4 months, when US inflation is running at 7.5%. So that has been the development. But what has been realized is that the fiscal policy levers, which was completely abandoned after the crisis, now the thinking goes like that the fiscal policy may have a better lever in stimulating the economy than the monetary policy, given the significant lags which a monetary policy has. In this context, I have only one concern to make. One concern is that in an economy, economy which is there's a lot of slackening of demand. So the argument of crowding out will not hold over here, because if there is slackening demand, actually public investment will crowd in private investment. However, capital expenditure multiplier effects is a research question which we all need to answer. If any of you have seen Hindi movies of the past, when we used to build up infrastructure with bare hands, I think those days are gone. If you look into the solar company, the largest solar company in the country which is running, that has only 430 people employing. Because what used to happen in the past is that there was a significant amount of backward linkages with the economy. But now, for example, the coastal road construction in Mumbai, the metro rail construction in Mumbai, you will find a lot of this capital equipment actually is imported from outside. So if this is the case, I think whether the capital expenditure has a significant multiplier impact, as it has been said in the macroeconomic textbook, that needs to be reassessed. Of course, it will have, but whether on the level of 2.5, which we say, I think that is a question which all of us must answer, and because there are examples in front of it. But anyway, that's a separate thing. But regarding the geopolitical issue we asked me, I think the most important point is, I think things have changed for the, a little worse for the after the budget was presented. Today, the oil is actually close to 100, and I'm not sure whether it will cross 100, but assuming that it crosses 100, I think it will have a multiplier impact on the inflation. The RBI has put out an inflation projection of 4.5% for the next year. It is guiding the market in terms of an lower inflation expectations, and assuming that the food prices are actually properly managed. If I have time, I will actually point out one more important behavior of the inflation in the post-pandemic. But I think the inflation numbers maybe, there could be a potential upside risk to the inflation numbers, whether, our inflation projections are higher than 4.5%. And also the fact that if oil prices continue and after the elections over in March 10, if there is any upward revision in the oil prices, I think that will have an upward impact on the inflation. And the other important thing to note is that I think what has happened is that if you look into the goods inflation and services inflation of the CPI basket, if you actually plot a line diagram for the last, let's say, 2 years during the pandemic, you will find that the service inflation has actually not declined significantly. I don't know why, whether it's a methodological issues or not, but that has actually remained at a constant level. That is also one of the reasons why the core inflation is consistently at 6%. But the goods inflation has now picked up pace and both of them are actually converging. So my sense is that if that is the case, and if the food prices continue to behave well, because that has a larger weightage in the CPI basket, maybe we can escape with an inflation number which will be closer to the RBI. But in all probabilities, I think there are upside risks to inflation which we cannot negate. And finally, I think the government borrowing numbers which came out after the budget, that was actually a negative surprise to the market. The bond markets were rattled. The rates had gone up to more than 6.9%. After that, the government clarified that they may not need to borrow and they cancelled auctions. So the yields actually rallied. Today, because of the Ukraine conflict, the yields are again gone up more than 6.7%. So this is, I think, one thing where the RBI will have to do very assiduously, because and 24 lakh crore gross borrowing program with a net borrowing program of 18 lakh crores will continue to put upward pressures on the yields. And this is one thing which the central bank will have to pull out all unconventional policy tools to support and borrowing program that goes through smoothly. Because if the exchange rate and the interest rate stays on, there are not major disturbance to the exchange rate interest rate, I think that will be good for an economic recovery, which is still incipient as far as the rural economy is concerned.
Okay, Mr. Ghosh, you covered a lot of points out there: inflation, the fiscal deficit number, how they are getting the off-balance sheet items here. So I'll cover all of this and we'll discuss that in greater detail. But Mr. Choksey, let me come across to you now. Last year, when they actually got the off-balance sheet items in the fiscal deficit number, markets actually cheered it. This was announced in the last budget where they actually raised the fiscal deficit number. This year, markets have been in their own mood. You think there was any key takeaway from the budget this time around? Capex, of course, was 135% increase out there in the expenditure. What stood out for you? And what did you expect actually that did not come through in the budget? Mr. Choksey, can you hear me? Is he, Mr. Choksey, are you there?
Yeah. Actually, I think I was on mute for a while.
Yes.
Okay. Thank you, Sonal, for asking this question. And I think thank you, BCA, for inviting me onto this panel. Honestly, I think both Shariq and Mr. Ghosh have, I think, very comprehensively covered the budget and budget-related aspects. I feel that Rohit Sharma and Ishan Kishan, when they open the batting, and both of them end up scoring century, I think for a one down, I think it's very easy for me to handle this subject. Anyway, so I think the main important point in this budget, the document has been extremely simple document. As I could probably see, as far as the budget presentation is concerned. Nowhere in last 30 years, I've seen somebody making such a simple document. For understanding to the masses, and that no wonder they completed the speech in an hour's time, I believe. The important aspect about this budget, and you alluded by asking this question, the transparency part of this particular budget document. Last year, they ended up padding up a lot of items, and in order to show the fiscal deficit on a lower side, they ended up showing 1,75,000 crore worth of what we call receipts from divestments. This year probably they developed the courage to accept the reality that you cannot have this kind of divestment taking place in a situation like this, because these are some of the complex activities which you are divesting, like Air India kind of a company. So obviously they realized it, and they pared down this particular amount to a reasonable sum, which all of us liked it. This market likes transparency. If you do not achieve the number, that's okay. But as long as you put across these numbers forthright, that this is what will be achieved. So in my viewpoint, this is the most transparent way of presenting the budget. The first point. The second point, why I alluded saying that this budget is a simple exercise, because according to me, it focused on three aspects. the A, the I, and the M. A stands for agriculture, I stands for infrastructure, and M stands for money for growth. I think at the backdrop of, Punjab debacle, the farmers debacle, I think the Prime Minister had, a significant amount of, responsibility in the budget to assure to the rural masses and the farmers particularly that MSP is a serious business. He has provided, to wheat and paddy farmers 3,37,000 crores in this particular budget, along with all other pharma ingredients, which is basically a rubber stamp on the process that they are carrying out, that we want to distribute money in the hands of rural masses, come what may. And this money is going in the hands of rural masses through the direct benefit transfer, which is basically helping the economy in general, because I think the money goes in the hands of the people ultimately without any intermediary taking this money. Consumption level boost, happens in the economy. And that is what the cornerstone of this particular scheme of arrangement is. Along with that, he also provided some 18 lakh crore worth of amount, for the purpose of credits, which is being going to farmers. So which is again, is a positive thing as I see it. The other part of the activity, which is which is again, an important aspect, is infrastructure. Gati Shakti Yojana announcement in 2020 on October, has basically brought the budget reference here straight away. 100 lakh crores worth of amount to be spent in the economy is something which is a great thing to hear in economy. You'd go back to history in the last century, 1960 to 1980, South Korea, and 1980 to 2010, China. They significantly ended up spending money onto the infrastructure, and they ended up producing a growth rate of around 10% plus. In my viewpoint, this is where probably Gati Shakti Yojana birth has taken place. Spending 100 lakh crore is not a small amount. Providing 7.5 lakh crore, which is 2.5% of the GDP, is not a small amount in this budget. And the commitment to spend this kind of money is definitely asking for a few things as far as the global investors are concerned. Global investors who are flush with liquidity at this point of time, they really look for, the opportunity in some kind of a proposition, which is what Gati Shakti Yojana and this kind of expenditure budget, which has been shown in the finance budget, is basically talking about. In my viewpoint, with the global economy having significant amount of liquidity, about $2.6 trillion worth of liquidity is sitting in the hands of masses in USA today due to the stimulus amount. The institutional money is also significantly large, and those who argue that yes, in 2 years' time the Fed tapering will take place, but mind well, it will be from 0 rate of interest to going up to 1% plus rate of interest. And still, the inflation projection which you look at, is going to be 2.2%. So in real terms, US economy is working on negative interest rate. If this negative interest rate scenario continues the way it has been pronounced, even if they increase the rate of interest, even if the 10-year bond yield goes up to say 2% or 2.2%, still you are in a negative interest rate scenario. And this is where probably country like India would end up attracting a lot of money. Because imagine you are sitting on a pool of funds and you don't have the inflation also to your covering. In such situation, your requirement would be to deploy money for growth. And this is what India is offering. Various projects, including in the projects like PLI projects, where the different around 14 sectors have been covered, and about 30 lakh crore worth of additional output being talked about, with 50-60 lakhs new jobs being talked about. Or you look at, the 9 lakh hectares of new land, again, water irrigation, spending money close to 60,000 crores, 48,000 crores worth of money being spent on building the rural houses, new 25,000 kilometers of expressways to be built up. And under Gati Shakti Yojana master plan, bringing some 16, 17 different ministries together and putting the single window clearance into forefront. Basically, India is talking about creating an economy which is likely to grow after 2025 at the rate of 10% for next 10 years. If that situation so happens, then from less than $3 trillion economy, we are talking about going into the space of around $12-13 trillion economy over next 12, 13, 14 years time. And if that is so, then I think I come from the capital market. I always look at, I think, numbers, how the market capitalization would get reflected. Less than $4 trillion worth of market cap could possibly, on a similar ratio that we are talking about today, on a $2.8 trillion economic size and less than $4 trillion market cap, if the same ratio is extrapolated, we are talking about, I think, the market cap of somewhere around $15 trillion going forward by 2035. So in a journey of around 10, 15 years from now, we are likely to see a massive production of wealth in our economy. And this is where I believe is the foundation stone of this particular budget. So the three keywords, A, the I, and the M, the money for growth, they are basically making a lot of sense as far as I think the outlook for the economy is concerned. And the opportunities are opening up big time as far as I see this particular budget is.
Okay, simple budget, three big letters that you spoke about, AIM, AIM that is, and yes, more prospects for growth. But let's drill it down now. And I would like to ask this question to all three of you again, because, you know, once this was announced, before that, there was a lot of discussion, a lot of debates out there. And this is all about taxing the virtual money. I remember when we were just discussing it like that, there were a lot of, ideas, opinions about what it actually be. Mr. Contractor, let me come across to you first. A 30% tax on virtual digital currency. What does it mean in terms of legality? There is a long definition to virtual digital currencies. How are we going to evaluate? What is the fate basically as far as the digital currency ecosystem is concerned?
Yeah, I think it's a very interesting question and an interesting topic. And I wonder whether you have invested some money in the digital assets.
No, I'm not that millennial.
The only way to understand is, I think, to put some money in it. Perhaps when you have skin in the game, you understand better. But I think this time, first of all, they have defined the virtual digital asset. They wanted to, I think, attack the cryptocurrencies kind of situation. But obviously, the word currency is a taboo word. You cannot use it because the government clearly does not want to recognize those assets as currency at all. So the Reserve Bank has very clearly said they will perhaps come out with their own digital currency, which will be called a currency. This is not going to be a currency. They want to treat it as a different asset. So what have they done? First, they have said any virtual digital asset will be taxed at 30%. No expenses will be allowed except the cost of acquisition. So even if you are, for example, paid interest to acquire that particular asset, interest will not be allowed. You cannot claim it as no other expenses to be allowed against this very clearly. If there is a loss, then that loss cannot be set off against any other profits and so on. Even if you have made one loss and one profit in the same digital asset, what would happen? Would you be allowed to set off one against the other? I think it's a controversial view. Both views are possible in that. My personal thinking is that yes, if I make one loss on a crypto asset or a blockchain asset and another profit, then I should be allowed to set one against the other. But that's not the case. You asked about the definition of the asset. It's a long definition. And I think it very basically says that anything which is digitally capturing value is covered. But the government, frankly, I think also does not know how to define this particular asset. So what do they say? They say this is an asset, a long definition, and then they say, however, we may by notification say what other assets would also be covered in the digital. So they want to guard themselves that perhaps we have forgotten something, this will also be covered. And then they realize maybe we have covered too much. So they have also added in the definition, we may, however, eliminate some of the assets which are not to be covered by the cryptocurrency. So I think it's a bit of a problem in drafting, because what is the point of drafting, giving a huge definition and then saying, I can notify some and I can remove some? I mean, it doesn't make sense. And the last point is that, in this particular asset, they have said all kinds of assets, including NFT. Now, NFTs are assets which have an underlying asset. It could be a song, it could be a painting, it could be a story. Now, are those to be considered same as a pure blockchain or a pure cryptocurrency asset, which has no underlying asset to value it? If I sell a painting, I'm going to be taxed in a particular manner. But if I sell a painting through an NFT, I will be treated completely differently. So these are issues. And finally, the government itself has very clearly said that legislating on the digital asset does not mean we are legalizing. It does not say whether it is legal. I mean, they are not commenting on that. In my view, the government cannot make it illegal. They can only govern it, which they are trying to do now through this particular mechanism. And they've come up with the harshest possible provisions that you will be taxed at the maximum level without set-off, without allowing any expenditure.
Ironically, Finance Minister in her post into budget interview did say that it is not legal yet, but they did not call it illegal. So things are still very dicey here. And the interest in cryptocurrency still remains as far as the general investor community is concerned. But one organization which is absolutely against cryptocurrencies, Mr. Ghosh, is RBI. I'm actually quoting them where they said that we have also seen that cryptocurrencies are not amenable to definition as a currency, as asset or commodity. They have no underlying cash flows. They have no intrinsic value, that they are akin to Ponzi schemes or maybe even worse. So that is the word or the opinion that is coming in from RBI. And what budget also spoke about is a digital currency coming in from the RBI. What are your thoughts? How soon can it take off? And about RBI's extremely negative comments about cryptocurrency versus government actually taxing it. How do you think that would work out in the longer term?
No, I think, Sonal, that's a very interesting question. And I'll just take you back 3 years. In 2018, if you remember, RBI, there was a case which was the Supreme Court, and which the ruling by the Supreme Court was that the RBI had filed a plea of actually making the crypto not a legal tender. And so I think in that case, the Supreme Court heard the case and it gave it judgments, and it actually struck down, if I remember, it struck down the RBI the move. But it gave the judgment saying that RBI has the concerns with the RBI based on financial stability remains valid, but they actually struck down the case. So that was, I think, the turning trigger point for the Reserve Bank of India to decide on introducing a digital currency, which will not be tradable. So I think the saga goes back 3 years when the Supreme Court actually passed a judgment questioning the RBI the move to make to actually ban the digital currency. Now, having said that, I think yes, the central bank has expressed concerns, and some of the concerns are actually genuine in terms of financial stability. Because if you remember, in the eastern part of, if you actually look into India as west, north, south, and east, you'll find a very interesting observation. If I am correct, if I actually look into the data in the last, I think in the last financial market, when the last 2 years of the stock market rally, and given the huge retail participation in the stock market, you will find that a lot of this investment actually has come from areas of west and north. But when you look into these gullible investments, I think, as you know, that in West Bengal, for example, there has been so many schemes of Ponzi schemes whereby that has been caught, and this has happened mostly in the eastern part of the country. And I don't know what is the distribution of the money which has been put in the cryptocurrency, whether it is more from the eastern part or western part. That's a matter of, I think that data is not available. But my sense is that this is one of the concerns which is in the back of the RBI mind, because whenever the money is made in small amounts of doubling it and trying, I think there is always a gullible element over there. And there are examples significantly in the past which shows that maybe states which are not, I mean, and in states like eastern part of the country will actually find that maybe the participation in the stock market is not that great, but in this instrument. So that's the second point. So basically the RBI concerns on financial stability is legitimate, and it actually stems from past history also. But the third point regarding the digital currency, my sense is that yes, it's a good initiative. Out of 90, I think if you look into the history of the central bank currency, only around 8 or 9 countries are actually now looking into it. And India, if it launches a digital currency, it could be ahead of Fed and European Central Bank, because they have decided not to go ahead it as of now. But digital currency, basically, I mean, if I take just 2 minutes, it will do nothing to the central bank balance sheet, because it will just be a part of one currency. It will be passed out of one currency, so it will be a liability. So there will be an offsetting asset movement in terms of maybe more foreign exchange reserves or gold. So that will match each other. But the important point to note is that if you have a digital currency, and the discussion of which is going on right now, I mean, whether it could be in wholesale digital or it could be in retail digital. I think India has a fairly successful history of an retail transactions. If you look into the UPI history, which has in fact jumped by 800 times in the last 5 years in terms of value. So I think what will be more important, or maybe the RBI could be looking into it, is could be the wholesale digital currency. In wholesale digital, what actually could happen is that, as all of you know, that the commercial bank hold reserves with the central bank in electronic form. So in that case, the RBI could actually introduce some sort of a digital currency which could link the bank reserves which the commercial banks are holding with the RBI, and that could be linked to the lending the operations of the bank. So in that case, there could be a direct impact of the real and financial sectors in real time, and this has happened in China. So there are several examples, but at the end of the day, there are advantages of a digital currency in the sense that it will make the transfer of money faster across geographies, because now it will be a real-time transfer. But obviously, there are issues of fraud. There are also issues of whether it could be anonymous. There are issues of whether how much investment, who will bear the investment, the commercial banks or the RBI. That's the issue of also fiscal policy supplementing monetary policy, because if it is introduced as a digital currency, then obviously it could reside as a wallet in an account of an individual. So in that case, the RBI can directly do, the central bank can directly do fiscal policy that can support monetary policy. So these are other things, and obviously the issue also of commercial banks as financial intermediation. So it's an interesting take, but my sense is that there are a lot of issues which needs to be addressed, so that to move towards, if I call it, a digital rupee in the future.
Okay, so interesting take as far as cryptocurrencies and digital rupees concerned. Deven, my question to you, you know, cryptocurrencies, they were the cool word or something that everyone was investing in. They forgot about equity markets for a bit. There were meme coins that came up, and so much happened out there. In that scenario, do you concur with Mr. Ghosh's view that whatever RBI is saying about cryptocurrency that holds, or is it an interesting asset class or an investment class, if at all you would look at? And in that scenario, you know, the general consensus was that if there is taxation on cryptocurrencies, that money will move actually to equity markets. Do you think that is something that is a right thing to say?
So, Sonal, I think Mr. Ghosh has very cleverly explained, I think, this entire subject about how this particular thing is being treated at RBI level. In my viewpoint, I think there is no case of, I think, calling it as a currency. In fact, I think whatever the workout, I think that one has done, I think in form of mining the coins and probably incentivizing the mining process, I think you can't be calling it as a currency. The currency has to be prerogative of central banks. And I think RBI and Government of India is rightfully thinking in that direction, according to me. So terming it as an asset class, I think is not arising. That situation doesn't arise. Maybe in the initial evaluation stage, I think where things are working in that way, where the regulations are not prevalent in the global markets, I think somebody thought of making it as an asset class. But according to me, I think that is not the case or will not be a case. That is what I believe. Having said that, I think it has created $2 trillion worth of, I think, market cap in the global markets, largely because of the fact that I think after 2020, the stimulus money ended up resulting in a lot of accesses everywhere. I think this access also got created into the crypto world, and I think the currency got the wind probably, I think, with this kind of market cap. I do not know, I think, what kind of collateral damages it may have when systematically country after country, they start banning this particular currency, so-called currency, and do not recognize it as an asset class. India has taken the first step of not recognizing it as an asset class, along with, I think, some other countries like China. So from that perspective, I guess, I think we are right on the track. How much is the collateral loss? What would be the impact? Whether the money will come into the equity market or other asset classes? Time will only tell that part of it. As of now, it is too early to have a guesswork like this. However, I think to add one particular point, I think which Mr. Ghosh was alluding in the area of digital rupee. In my viewpoint, I think having got the clarity that the rupee will be, the physical notes will be fungible with the digital currency. This holds one important character, according to me, that once you have the digital currency coming out, the tracking and tracing mechanism will by default get established. And once this tracking testing mechanism gets established, I think as a RBI as an organization will be in a far better situation to control, I think, the release of currency at one In turn, I think it will help them on the what we call monetary supply side as well at some point of time. Too early to say that it will happen in 1 year, but I think over a period of time it will definitely happen. And if my visualization travels further, it says that if you have ultimately the currency becoming digital, and if the tracking and tracing mechanism I think is established, probably you are heading in the direction of I think collecting the tax through the currency transaction itself going forward. Should that happen, probably it may address Shariq's first concern about I think changes happening into the finance bill. If the currency transaction tax, I think, takes over income tax, I think this country would have significant amount of large money to collect and probably, I think, much better times going forward. But this is only a visualization. At this point of time, I think we'll wait and see how the RBI and the government of India comes out with the policy on the digital currency side. But potential would remain extremely high going forward for the digital rupee as a currency.
Okay, so while we are at the point of digital rupee, currency, cash in general, Mr. Contractor, I just wanted to follow up on what we have discussed already. Just in a little bit now, we would like to do it in detail, and that is about Section 68, cash credit. You know, it's considered to be one of the provisions which would have a severe implication. We did speak about it. Can you give us more details? How would it impact taxpayers? And in the larger picture, how big of an impact do you think it could bring in?
Yeah, so I think this is one of the amendments which is really in a way disturbing. So far, what was the government saying? That if you bring in money, then you must explain the source of the money that you bring in and the identity of the person who's giving you the money. I think that was considered as sufficient. You cannot go beyond that, is what the section was saying and what the courts had also been holding. Then they made an amendment with respect to money coming in by way of equity capital as allotment money or share subscription money and so on, where they said that if it is a money which is coming in from a company which is a privately held company, from a resident individual, then it is the onus is on the company to even explain the source from which the person who is giving the money has acquired those particular funds to be invested. Now, they have said that even in case of loans, you will have to explain what we popularly call the source of the source. And what is it saying? That even if the money is coming from a non-resident, the person receiving the money will have to explain the source of the source, even if it is from a non-resident and also from the Indian resident field. Now, do you seriously feel that how will an Indian resident who is borrowing be in a position to say that I will explain the source of the source? How can he go back to the person from whom he has borrowed to say, please explain the source from which you have got the money to give me the kind of loan that you are giving me? And I think that becomes an extremely difficult one. In fact, the way it has been drafted, it puts the entire onus on the person receiving the money. I would have thought the simpler way would be that if it is a foreign money that is coming in, then one could always have said it has come through the banking channels. It has been routed through it. You have enough checks and balances to establish that it is not tainted money, so to say. And if it is Indian money, and if you give the PAN of the person who is giving you the loan, then surely the department now already has all the information available through PAN. The information technology is robust enough. In fact, the department has time and again said that we have all the information. Why put that onus on the person receiving? Because he may not be able to discharge it. Take a situation that I have taken a loan and I've already repaid it. When my assessment comes in, the person will say, explain the source from which the person who paid you the loan, how did he get the money? I may not be able to approach him because I've already repaid the loan. What would happen in such a cases? So I think this provision will create a situation where it may be impossible for the person borrowing to explain. I understand, explain the identity of the person donating, giving the loan, explain the genuineness of the transaction. But how does one explain the source of the source and go to the lender to say, please tell me from where you got the money? It may be a very difficult situation.
Oh, you're absolutely right. And that is something that a lot of assessees will have to deal with as well. So how that pans out, whether there are representations on this one, we'll watch out for that. Just a note for our attendees as well, you can actually send us some questions in case you want me to pose that to our panelists, and we will try to take them towards the end of this interesting session that we are just conducting. Mr. Ghosh, I would like to come to you. Of course, the biggest point that we all have been talking about, you spoke about it, inflation. Considering that crude oil prices have gone up higher, there are expectations crude prices could go up as much as $130 billion. You did mention briefly, since the receipt amount that the government has actually estimated, they're reasonable, both of them. Some of them, we also have been talking about how they have actually understated the receipt amount here. But in general, what is your sense? Inflation going forward, will that be a bigger pain point? Can it actually cross the RBI estimates on the inflation number?
Yeah, Sonal, I'll just, before I answer that question, I'll just give you a number, which I think I was trying to forget. I think as of December 2021, 87 countries, which is around 90% of the global GDP, are considering to introduce a digital currency. And I think 9 countries have already done it, and India along with South Korea and other countries are contemplating. Now, having said that, let me come to the inflation part. Let me just go back a little bit, because I think there are some interesting things which is happening. First is that if you look into the data on the inflation, this is basically just very simply I'll put it. The inflation data which the NSO estimates is based on a consumer expenditure survey, which is of 2011-12. So it's a 10-year-old consumer expenditure survey, which is not updated. And you know, intriguingly, if you look into now, there is the element of food over there, the basket of food expenditure in that overall CPI is at 45%. So this is the first thing. Now, if we just fast forward and look into the national account statistics data, which gives a breakup of private final consumption expenditure. Basically, it's almost analogous thing of the consumer expenditure survey, which is done separately, and this is the private final consumption expenditure. There, the weightage of food is only 32%. That was in 2021. So you can understand the anomaly in the weighting pattern, which is estimated to calculate the CPI headline in India. This has been a bane of concern earlier also. We have pointed this out, but what it does is that it actually distorts the CPI inflation number. In fact, we have been doing and consistently tracking the CPI number for the last 2 years by using the SBI credit card data. And if you look into the SBI credit card data, and if you look into the breakup of the discretionary and non-discretionary items, given the fact that consumers have been stuck in the home during the pandemic, they are consuming more of food right now. So basically what has happened is that, and in India also there is another methodology which does is that it computes the inflation, which is only through the fixed price index. That means the weights are assumed to be constant over a period of 10 years. But in all other countries, inflation is computed by using a variable weights, because it is natural that as the economy is transitioning, you will have different weights on the food, as I've just explained. But because of this, if we do an estimate of inflation calculation by using a variable weight index, the inflation numbers is actually higher than 6%, which has been reported. But let me assuming now, so this is the first thing. So basically the reported inflation numbers could be higher if we move to a new methodology today. But let me assuming that the NSO numbers and 6% inflation numbers are correct. So even if I assuming that today, I think what the RBI has done, and this I have said in the beginning, I think the RBI has actually taken a very calculated gamble, because it wants to guide the market and it doesn't want the yields to break up and break up to higher levels. So it is guiding the market with a 4.5% inflation number. But if all the numbers basically turn volatile, for example, if the crude price starts to, has already moved up to 100, if the prices of crude oil are revised under the elections, if the food prices, which is already going up significantly, doesn't behave the way it has been doing in the last 3 to 4 years, And if the service inflation, the point which I mentioned to you, that the service inflation has consistently been rock solid at 6%, even when you are not consuming services. So that's actually a matter of, and that's exactly because of the methodological issues. But but if I keep aside that, service inflation has been consistently dogged at the 6% level. So if I take all these factors into consideration, the crucial point of RBI and the inflation numbers to be around this level which the central bank is contemplating is have a very well behaved food inflation number in the next couple of months, which is going to be a touch and go. Of course, the food inflation has held the RBI inflation trajectory, and if the core inflation goes up, because as of today, some of the components like education and others, since the economy was closed, are significantly on the lower side. So as the economy opens up, service inflation could hold a little higher. And if the headline inflation converges towards the core inflation, I think the inflation numbers could be a little bit on the downside. So it is possible that the inflation numbers is higher than the 4.5%, but I agree with the RBI assessment in the fact that if you look into the just last one point, if I look at the experience of the Bank of Australia, which is also an inflation targeting central bank, for the last 25 years, what they've been doing is that they are targeting inflation through the cycle and not at a point of cycle. And I think the Reserve Bank of India is also trying to do the same thing. If it is, I think, and it has been largely successful in the last 2 years, let us hope that it is again successful. But inflation, there could be some inflation numbers which could be obviously higher than what we are anticipating.
Okay, so Mr. Choksey, do you think that is something that markets will continue to be worried about? Already we are seeing lower levels day by day, whatever is happening geopolitically as well. Inflation, that remains a concern for you as well, as far as markets are concerned?
Yes, I think inflation is going to be talking point for some time, as I see it, largely because of the fact that the crude oil prices are creating a significant amount of stress in the global economy in form of a higher amount of commodity prices, resulting into higher amount of cost, and cost is leading into the inflations. Inflation would lead into the interest rate hike and all. Everything will, I think, happen in sequence, one after another. So certainly, I think this particular subject will remain a talking point. However, the fundamental questions out here, and I think it's a very pertinent question, whether this oil price rally will sustain in its own. I think this is very, very important. Today, because of whatever the geopolitical situation, whatever the disturbance which has happened, I think this particular prices have shot up. In my viewpoint, I think it is a matter of time that oil producing countries would come together and start cooling down the oil prices by way of increasing the production. Because what we are observing is that I think most of the economies of the world are moving extremely fast with alternate energy segments. And if today the announcement which has started happening pertaining to the green fuel, green hydrogen is a reality, structurally in next 10 years time, what we are talking about is significant amount of contribution coming in from the green energy sources vis-a-vis the conventional energy sources. And I think if the oil producing countries, they want to take the advantage out of it, they may probably want to shell out, I think, maximum out of their fossil fuel in a given period of next 10 years. So in my viewpoint, the entire fossil fuel, the crude oil prices and related consequences of inflation, etc., they are practically transitionary in nature. Now, having said that it is transitory in nature, I think whether it will last for 3 months, 6 months, 1 year, 2 years, 3 years, difficult to predict at this particular point of time. But very clearly the message is that if your cost of production at exploration level is 54, 55 to $1 to barrel to dollar, I think your basically selling price should not be, I think, more than 65 per barrel, $65 to a barrel. I think as against which I think you are already close to $100 to a barrel as a crude oil prices. It's a matter of time it will come down. But till the time it happens, I think it will have its own disturbances, its own challenges, its own cost-related pressures, inflations, interest-related scenario, etc. In my viewpoint, I think we are looking to a situation wherein 8 to 9 rupees per power unit is converting into 2 or 3 rupees per unit cost of power, which is happening and happening very fast. Should that situation become reality in next 10, 15 years time, according to me, I think we are heading for some better time going forward. And as a country, India is putting a lot of thrust on manufacturing, also including under this PLI scheme, inviting a lot of investments. in my viewpoint, I think this is going to be a big catalyst, a big game changer going forward. So we'll keep an eye on this, while I think not ignoring the disturbances getting created due to the high crude oil prices.
Okay, so clean energy could be the big sector to watch out for. And that was one of the questions from one of our attendees as well, Mr. Debashish Chakrabarti, was asking which are the sectors going to do better in coming years, in next 3 to 5 years. Of course, we'll ask you more on that. But since we have been talking about inflation, which is an invisible taxation, so let's go to our taxation expert again, Mr. Contractor. You briefly touched Section 37 as well, relating to expenditure, which is an offense or prohibited by law, and it has been expanded, which now covers both Indian as well as foreign laws. Don't you feel that a businessman or professional or even assessing officer would not have the knowledge of compliance of the foreign laws? It could actually increase your task, make it more difficult. What are your views on this one?
No, I completely agree. My initial reaction is that what is the purpose? I'm unable to understand what must be the rationale of the government to do this. I could understand if you say that if I'm violating any Indian law, it's fine, but I may have a joint collaboration. A US company may have very different laws relating to many things, like I said, patent law, or it could be relating to racial discrimination, for instance, and stuff like that. I would not even know that I am doing something which may be in a violation of that particular law. So I think that needs to be kept in mind. And to put this kind of burden on the Indian party to determine in advance whether this particular thing is possibly in violation of a law or no, may be very difficult. And along with that, there is another thing that I mentioned about that if you have made any payment, a perquisite or a benefit to a person which is in violation of the regulation governing the person who is receiving the payment. Now that is even worse. Take an example. If a company has a policy of saying that I cannot take a gift of more than 3,000 rupees, for instance. Now it is an internal guidelines. If I, as an external person, another company, give those employees in Diwali a gift of 4,000 rupees, the officers of that company, I am not aware what is the internal policy. Would it be considered as a violation? Because it is a violation of the internal policies governing that particular employee. How would it work out? Again, my view is that it is not covered by this particular amendment or a section, because first of all, the amount that I pay should be in violation of some fundamental basic law, not just an internal guideline. The internal guideline should have the backing of law, which is a kind of case in a pharmaceutical company where it has a backing of law because the guidelines have been laid down by the medical council, which is constituted by the parliament. So that is a different matter. But I agree with you completely that, why burden an Indian entrepreneur with saying that if you do something which is in violation of the person receiving the money and there is a violation of a foreign law, it will be disallowed in your hand. I think it's an unnecessary burden.
Okay, we are going too global, it seems, even with our laws as far as taxation is concerned. But Mr. Ghosh, unemployment has been an issue. We have been speaking about it, be it the state-wise unemployment figures overall. We have spoken about income disparities growing. You think the budget has been able to address that well?
I think this is a very interesting question, and I have a different take on the unemployment issue in India, and I think it's the problem in India is more of an underemployment. We have been writing about this for a long time, but it's also a fact that the labor market has been significantly disrupted during the pandemic, and there is no denying. But let me point out some issues over here in terms of the employment. I think as I said to you in the beginning, that the point which I said to you in the beginning is that the traditional macroeconomic theories may have been maybe undergoing change in the thinking, and there has been also a lot of points which has been made that why the allocation of the Nariga was not increased, why the allocation of the Ministry of Rural Development stayed at the same time. My point is that the government has made it absolutely clear that because Nariga is one of the ways to absorb if there is any reverse migration, because of the pandemic, the share of agriculture in GDP has actually gone up. So that's a reverse migration. So I think that what the government has done and what it has said also in the budget, and that is the reason why the numbers are conservative, that if required, will of course increase the allocation on the Nariga. So this was clearly said by the secretary after the budget. So that is one point which we need to take into account. And regarding the employment, so basically if there is, I mean, and given the fact that rural sector is still under a little bit of stress, I think it is possible that during the course of the year, there could be an increase in the allocation of the Nariga, which could address this sectoral imbalance in terms of the employment, which is moving from the to villages. But having said that, I think the one thing which I would like to highlight, and that is very important, I think Mr. Choksey has mentioned it in the interaction, is a PLI scheme. And let me put out some numbers over here. I think India's imports from China is around, commodity imports from China is around 39.5 billion. Now, India has introduced a PLI in 9 of the sectors where it imports from China. And India's imports from China share is 16%, but India has been consistently reducing the imports from China in the last 2 years. The total import reduction has been around 6 billion. Even during the pandemic, it has been able to reduce it, but through a smaller amount. Now, we did a simulation exercise, and this is the fact that the government is trying to have an focus on the scale of the manufacturing sector, because that is the ultimate way of creating jobs. Now, if we just do a small simulation and we're assuming that even if you're able to cut, say, 20% of these 39.5 billion imports from China, that could add up to, 3% to our GDP. And if we're able to cut this share by 50%, say over a period of 5 years or 6 to 7 years, that could add to 7% of our GDP. So this is a rational thinking in terms of giving a push to the PLI scheme. And ultimately, at the end of the day, you have to reduce your imports from China. But the good thing is that this year, our exports to China has been also doing quite well. And the share currently of the exports to China is 7.3%. So, and in this context also, I think the focus on the special economic zones, the recent signing of an agreement with the UAE are all positives. And these are going to create jobs. So I think employment, the government is looking at employment in terms of a long-term issue. They are looking into empowering people, and let's hope that the PLI scheme is showing traction and it continue to show traction in the way, because there has also been a lot, and I will end this argument with this one, there's also been a lot of criticism that the government, that our taxes or tariffs have increased, so basically more protectionism. But let me point out over one thing, without denying that fact, that in 2008, when the global crisis happened, USA also had turned inward, and that was the reason why the shale production was increased significantly. And today you can see it the US stands. And the same thing is with the China, whereby they have been very, protective, and India is now trying to capture the lower end of the manufacturing scheme, which China is vacated. So there is no harm in that thinking, because every country turns things inward when a crisis happens, and USA and China, USA is the prime example. So let's hope that the PLI scheme the government envisages is able to create mass employment, which is the need of the hour.
Okay, so PLI scheme could actually create the mass employment that we've been talking about. Mr. Choksey, your take on the PLI scheme? Are these certain sectors which you like, the manufacturing bit? There was pharma PLI, we've seen PLI in the mobile sector, consumer goods. Anything that you like in a market like this? And if you could tell the attendees today how to approach a market where there's so much uncertainty as we speak.
Yeah, I think about 14 sectors have been covered under the PLI schemes, and starting from electronics to automobiles to the textiles, and I think electronics, each and every area is basically getting covered under this particular scheme. And the last one to join in the rank is about the semiconductor businesses, I think, which has invited significantly large amount of investment interest also. So in my viewpoint, I think this is definitely, I think, going to be a game changer. More importantly, when the entire world was distributing free money, I think we ended up creating this particular PLI structure, which ended up, I think, attracting a lot of investment into countries. So I think this investment is going to be sort of permanent investment, which has a potential to increase, as I said, I think about $500 billion worth of manufacturing products. Definitely 50-60 lakhs new jobs getting created is equally important. In my viewpoint, I think the industry as a whole, in each and every corner, I think is getting benefited. Difficult to say at this point of time, I think, which one would get the maximum benefit out of it. But keeping eyes and ears open, I think in most of the cases, I think you are likely to see significant amount of investment, which will probably help them in growing the business, I think, for the companies. Overall, I think as far as my investment thesis goes, it would be based on, I think, the 5 C's. I think one would be the consumer, second would be credit, third would be climate change happening under COP26. Fourth would be, I think, the amount of, I think, the businesses which will come because of the cloud computing and the digital way of computing. So in all, I would think that I think the overall the business conditions would cover under each of these 5 areas in a very systematic manner going forward. Whether we like, I think, these businesses, I think, under different sectors for investment purpose, I would think that I think, yes, the story goes very strong from here on. We can keep on counting the names, we can keep on counting sectors, but I think the opportunity size becoming very big is very obvious and clear here.
Is something that Deven actually is advising could do well in the future. Let's talk about the taxation bit now. Mr. Contractor, in this particular budget, we did see amendment with respect to bonus stripping. There was a ban out there. This was a way which was used by a lot of HNIs for their shares, for REITs, for InvITs. What kind of an impact do you think this one will have?
No, I think this was an amendment which was there that was waiting to happen. I think a lot of people have used bonus stripping as an exercise to try and save their taxes, and it was going to happen. So earlier we had the provisions relating to dividend stripping, which are now becoming sort of defunct because dividend is becoming taxable. So they have amended the section to say for dividend stripping, now you will cover not only the shares if the income of dividend is exempt, but you would cover REITs, InvITs, and dividend from AIFs and so on and so forth. So if you have an exempt dividend, then to that extent, dividend stripping was covered. But now they have extended this to bonus stripping. And what have they said? So if you get a bonus share and thereafter sell the original share at a loss, because after the bonus share, the prices may have dropped. So you sell the original share at a loss. And if that is being sold within the shares acquired within 3 months before the record date and are sold within 9 months of the record date, then in that case, the loss would be disallowed because it would be treated as a bonus stripping. And the loss so disallowed would be added to the shares that you are holding with you. That is the new shares that you have acquired. It would be added as a cost of theirs. So I think that amendment is a reasonable one in my view, because this was being used as an exercise to sort of offset other gains and so on, so forth. So they've used this and they have given a reasonable thing to say that it would be added as the cost of the existing shares. But the loss that you incur if the shares are sold within 9-month period of time would be considered as loss incurred on account of by planning of the bonus stripping, and therefore to that extent such loss would be disallowed. So I think that's to my mind a fair proposition.
Okay. Mr. Ghosh, this particular budget saw a lot of capex announcements, but do you think government should have just gone for direct cash in the hands of the marginalized instead of this? That is something was expected. Populist budget is what everyone was talking about ahead of the elections. You think that could have been a probable or a more appropriate step that should have been taken by the government?
It's a very difficult question to answer, but in my sense, I think there has been, if I take your the question correctly, I think there has been a lot of demand about an urban Nariga program is supposed to be the rural Nariga program. So I think what the best the government could have done it is that I think it could happen at some point of time, because that is my sense. One thing, if you look into one of the data which the government has collated in the last 5 months, I think beginning August, and it has been a Herculean number which they have developed, is I think around 25 million unorganized workers have registered on the eShrom portal, and the and almost most of these accounts are now related to are bank related, and these workers are classified in terms of migrant workers, agriculture workers, and like that. So my sense is that the government could have a fair bit of idea about the level of, people in the urban areas or in the rural areas who need some sort of support. So maybe in the future, one could see that a part of the NAREGA budget is carved out for also an urban NAREGA program. That could be one of the options. But if you had asked me whether to put more money in the hands of the people, I think the government has clearly said earlier also that it doesn't want to work. It doesn't work on the principle of giving doles. And interestingly, I'll just put a recent data. I think in some of the states whereby doles are carried out, you will actually see that the unemployment numbers are lower. So whether because people want to take their doles, they don't want to work, that's a matter of debate. But my sense is that it has taken the correct route in terms of empowering, trying to empower people through terms of jobs, instead of trying to go through a short-term solution in terms of giving more cash. We can always debate that there could have been more financial support. And I also believe that there could have been, the fiscal policy could have been more compassionate. Compassionate fiscal policy is not putting more money in the hands of the people, but at least going for some tax concession like GST, which some of the MSME units have been demanding. So that is one way of looking into fiscal policy. But I think as a large, the government has shunned this idea, and I was not surprised when it was not announced in the budget.
Okay. We of course will also always look for more. Dil mange more is something that happens with everyone. So of course, this is a question that a lot of people have asked. But Mr. Choksey, the next thing that people are asking for and asking more details for is the big LIC IPO. How do you think markets will take it? It's one of the biggest offerings that we've seen in a while. What are your thoughts here? The biggest insurer, big investor in listed space. Your thoughts here?
I think an important milestone as far as I think the country is concerned, because probably in any part of the universe, I think this could be considered as one of the largest insurance company into the world. And insurance as a business, I think per se is going to go miles from here, largely because of the fact that as the disposable income starts increasing in the hands of the people, the protection, I think definitely is the ultimate objective, I think would be the growth driver for the insurance businesses. Currently, as I see it, I think LIC being a company with more than 60% market share in the new business premium that they are having. Despite of, I think, 20 years of private sector into the insurance, I think they still have the dominant market share continuing. And as the insurance business goes, I think they will continue to grow the size of the book going forward. The asset size of the book of LIC is probably, I think, equal to the entire mutual fund industry put together. I think that is the size of AUM that they are having in the books. Very difficult for any sizably large investors of the globe, I think, to ignore a proposition like LIC. If they are offering 65,000, 75,000 crore worth of investment at this point of time, my take is that I think some of the largest institutional investors, the pension funds, the endowment funds, the insurance funds per se or sovereign funds, they would be willing to put money into the proposition like LIC. Largely because of the fact that I think you're growing your premium book at the compounded rate of around 15% on such a large size. That is one important aspect. Second important aspect is that those investors who are sitting in other parts of the world, they are struggling to get the right kind of avenues for investments. I think they are not getting, as I was explaining earlier, they are probably, I think, working in an era of, I think, negative interest rates. So I think with such kind of large proposition coming in, they would be, I think, meaningfully parking their investment funds into a company like LIC. Third point, I think this company would probably end up giving a sizable amount of distributors profit, I think, to the stakeholders. So this is again an important aspect. So those people who are typically investing in fixed deposit and earning, I think, a close to inflation rate of interest, I think that is what they're earning. For them, I think it may be worth a chance to take, I think by taking some relative risk, they would be putting in money into LIC kind of an IPO. In my viewpoint, I think in all probability, this particular IPO will invite a lot of interest from the global investors. Will also invite a lot of interest from the individual investors in the country. I think as we can see, some of the new accounts, I think in the depositories have started opening up because of this IPO. So I think the coverage is going to increase as far as I think footprint of investor is concerned. So I would consider it strategically very important company. And at the same time, I think it will have the potential to attract a lot of money And not to forget that I think it would be among the first 5 companies in the country with the market size, market capitalization size. So ultimately holds the potential of attracting even further money from portfolio investors. So yes, I think the LIC IPO is a significant one for the country as a whole.
Oh, definitely. It is a milestone as far as our primary market and secondary market action is concerned. Mr. Contractor, let's talk more tax now, because, there have been so many amendments that you spoke about. And the interesting one that we also spoke about is the 194R section, which created obligations on taxpayer with respect to deduction of tax on benefits of perquisites. Can you explain to us what will be the case as far as valuation of such benefits are concerned? How would corporate gifting be impacted in such a scenario? And will it be similar to the case of, say, freebies given to dealers or any person in supply chain as well?
Yeah. So I think this is a section which is, basically a reverse of what we talked about earlier in terms of Section 37 or in terms of items being taxable in the hands of the person receiving it. Here, the obligation is put on the person paying it, and they have said that you have to deduct tax at source on any benefit or perquisite that you may be passing on to any resident individual, provided the benefit that is being received by the resident individual is arising from business or profession carried on by them. So the company which is making the benefit or perquisite and the person who is receiving the benefit both should be carrying on a business or profession. And if the benefit or perquisite is an amount exceeding 20,000 in aggregate, then the TDS of 10% has to be deducted on such payment. Now, understand one thing, that such benefit or perquisite that the person was receiving was always taxable as a benefit in his hands under Section 28(4) earlier. Now they realize that a lot of people were perhaps not offering it to tax. So take a situation that a company is paying is giving a watch as a present to one of the dealers. Now technically the dealer is getting that particular watch as an incentive. He ought to have offered it to tax, but the person was not offering it to tax, and therefore now you have to deduct TDS. The problem is a couple of things. How do you deduct tax at source when you are not paying money, but you are paying an asset in kind? And the words used are that if the payment is even partly in kind, then the payer should ensure that the tax has been paid thereof by the recipient. So if I am making a payment in cash, let us say I have to deduct tax of 10%. But if I am making a payment in kind, I have to ensure that the tax has been paid by the person receiving it. Now, what does that mean? The full tax or the 10% tax? Do I have to determine what is the tax liability of the person receiving, what tax he would have had to pay? Because in his hand, it could easily be taxable at 30%. My understanding is, and my reading of it would be, that the liability to deduct tax is at 10% only. The problem, as you rightly said, how do you value it? A lot of difficulty in valuation. There are no rules, but the fundamental principle is that you will have to determine what is the fair market value of that particular gift or a benefit. It could be a foreign airline ticket. It could be a holiday at a particular destination. One would have to work out. A lot of people have shown some concern that, if a dealer is getting one free, you buy five items and you get a sixth one free, would that be considered as a freebie and you would have to deduct tax at 10%? My understanding would be that there would not be any need to deduct tax, because this is like a discount given to the person. The person receiving it is going to account for money paid for 5 items, but book in his books of account 6 items. And when he sells it, he will obviously pay the tax on it. So it is like getting it at a discount, and therefore your purchase price is to that extent reduced, and there should not be any problem. Freebies given to customers would not be covered, because that is not arising out of the business of the person receiving it, and therefore to that extent any reward program benefit and all that given to a customer perhaps would not be covered by this particular situation. So it's a difficult provision, but the benefit would, the person making the payment, giving the benefit of perquisite would be covered. A lot of people have talked about, a business person, a company taking out people for a holiday, for a, let us say, a training program. and it is an exotic location which you are taking it, breaking a person out, would it be covered? Would it be a benefit of perquisite given? Or is it genuinely a training program and therefore no TDS to be deducted at sorts? These are completely open questions, and I think it would depend on the facts of the case. If you perhaps have a training program, let us say in the city of Mumbai where the person is residing, and you have a program like that, it would be a genuinely training program. It would depend on the facts of the case. If you take them on exotic location with family and friends and so on, obviously the facts would be very bad, and that would be considered as a benefit or a perquisite given to the person. And then you have to ascertain the value of that benefit and deduct 10%. And as I said, the words used are, if the payment is partly in kind, then the payer will have to ensure that the tax has been paid thereof by the person receiving it. So it could be a very strange situation that you are giving a gift to a person, but you'll have to tell that person that before you accept my gift, please ensure that you pay the tax, show me that you have paid the tax, then I'll give you a gift. I think that would be the situation to be considered.
You call it a complex provision, but you explained it to us so well. I mean, a lot of sections are there, a lot of subtopics are there, but of course, just another note to our attendees that since we are heading towards the end of the session, it's 18:40, so just please send us your questions. If there's anything, we'll definitely pose it to our panelists because there's some really interesting discussion happening out there. In fact, let me go across to Mr. Ghosh now before I take up the questions. We have done a lot of discussion around how the taxation laws are, what are the revenue receipts, what are the expected fiscal deficit numbers. So in the light of this predictable, transparent tax regime that we are talking about, where do we stand as a country? And of course, ease of doing business as well. Is it ensured by our tax laws?
I think in terms of the no changes in the tax rate, I think because in the last 2 to 3 years, there has been no changes in the tax rate. If I remember in 2019, we had made an attempt to move to two different tax regimes, whereby one will be completely, what I will say, and this will have no exemption, other will have exemptions. But I think after that, the government is yet to come out with the data of actually how many people have migrated to the new tax regime. Because in my sense, in a country like India, you need to give incentive, you need to give saving incentives to people. Even that, otherwise what happens is that if you take away the incentives, the tax structure actually becomes regressive, because the more you have taxes, the more benefit you will get in terms of if you have no exemptions. Now, having said that, in terms of the predictability and taxation, yes, I think the numbers suggest that we have moved on a lot of these parameters. I think some of these numbers have now been discontinued, the ease of business, the ease of business and activity index, so all these we have moved up. But my sense is that there is still an unfinished agenda in the budget. The budget has not carried out that unfinished agenda. That is the direct tax code. And hopefully, at some point of time in the future, as the economy moves to an steady state, we could actually see some of the changes happening in that sphere also. But I am happy that apart from the nitty-gritties which Mr. Contractor has explained so nicely, I think the broad contours of the budget is that it has not changed the rates. And I'm very glad that, because there's a lot of demand of taxations, that the exemption should go up there, or there should be a wealth tax imposed, which could have been actually disastrous in a situation like this.
Okay, Mr. Choksey, one interesting question from our attendee, and we have been talking about it generally for markets as well, and that's the new age listings. They're already down some 40-50% from their listing prices. There was a lot of valuation bubble that was created back then. Do you agree with that there's more downside to this, or they were fairly priced? And if not, what could it mean for the future listings or the future valuations of these startups? Because they will really start coming to the markets even more in future times.
So yeah, this is an interesting proposition, and I think I'll take a little longer to explain this part of it as well. Way back in the early 2000, when the likes of Google, likes of Apple, likes of Facebook, Twitter, and other companies, I think they ended up attracting significant amount of valuations. And at that point of time, I think they were still not making profit. In fact, Amazon for good many 20 years, I think did not make profit. I think it was basically burning cash. Only after Amazon Web Services, which started contributing, I think it started bringing the profits into the, otherwise I think they would not be making profits. So at that point of time, the valuations would be computed on the amount of sales I think that they would produce and the number of times the sales that they would have. On that basis, the valuation would get computed. When these companies were not public companies and when these companies were private companies in the second situation, I think at that time, I think the pressure of the public market could not be there. So they could easily walk away by getting the higher amount of premium valuations, as we call it as. Situation is no different for new age companies which have started coming into our markets. Some of these new age companies have been operating in India markets, I think, for some time. They have already built successful business models, like I think Zomato of the world. I think they have created, I think, a good amount of penetration with their business model. But if you actually see, I think, how exactly these particular companies are getting now valued after listing, the investor is basically demanding every single aspect of how the rupee is being spent, how the profit is generated or not generated. And that is where I think the larger amount of question comes in from the perspective of, I think, assigning the valuation to them. In my viewpoint, I think, again, this valuation will not be very simple to come by. These companies will have to demonstrate the ability to make profits going forward. Until that point of time, I think the premium valuation of yesteryears on which I think they have got the advantage of buoyant secondary market in which they got listed will not sustain. They may have to eventually, I think, give up a good amount of premium that they have gained through listing in form of, I think, rationalization in price, in form of, I think, the time correction as well. Both put together, I think it may probably, the subject companies may probably drag for some time. I think those who are invested into it. Having said that, what I'm trying to emphasize is that I think business model may be, underlying business model may be strong. But the fact that I think they'll take time to make profit until that point of time, the market will not give them the kind of appreciation which they got otherwise when they were not listed companies. So this is an important point of understanding differentiation for investors. These businesses would take time, I think, for somebody to make money. They would evolve over a period of time. I think our particular business model on which they started, it will not be so. Say, for example, I think you take some of the examples, companies like Google, they practically ended up acquiring one company a day for so many number of years, if you look at, I think, their history. And they kept on evolving themselves for a period of time. Today, Reliance Geo platform and Reliance Retail platform is exactly doing the same thing. They've been acquiring some of the strategically important companies into their, integrating them into their operations. They will not be profitable, but I think they'll make profit, I think, after, I think, they are successfully integrated into business model. If the subject companies that we are talking about, be it Paytm, be it Zomato, be it, I think, Nykaa, whoever they are, I think if they don't evolve after getting listed and I think create a successful business model, probably I think you will not be seeing the profits coming in so easily for them. So this is going to be a challenging journey for them. My own take is I'll keenly watch the business model. I'll keenly look at, I think, the potential of the businesses, and I'll also look at the strength of the company in form of, I think, the bandwidth that they possess in executing some of the business plan. If that is so, then probably I think it is worth investing when you start start seeing the profitability of this particular company. But till that point of time, it would be a real drag on your portfolio if you ended up, I think, saddled with this kind of companies.
Okay, it could be a drag on your portfolio. Intent to make profits is something that investors, of course, will be watching out for. And that takes me to the intention of the government. Mr. Contractor, maybe the intentions of the government are good. They want to make things easier. And considering the COVID pandemic, there have been restrictions. There have not been a lot of leeway that has been given to taxpayers, be it the due dates, be it the IT returns, be it certain provisions that we spoke about. Do you think in the long term, this could hamper the taxpayers' confidence? This is something that the government should work on?
Yeah, absolutely. I don't think there's any doubt about in anybody's mind about it. And sometimes you feel that the intentions are there. A lot of amendments, a lot of posturing is towards that direction, but the ground reality does not work out. I think as Mr. Ghosh also mentioned that sometimes you have to make some humane decisions in certain situations. This time we had the COVID unprecedented situation. Did we need to put some direct incentives in the hands of people who are the worst affected? I don't know. Perhaps one has to think about it. He also mentioned about the rates of taxes and not being affected. And I think the in tax parlance, no news is good news. So nothing being done has always been a good thing. And as far as your question is concerned, yes, the government needs to inspire this confidence in the taxpayer that the tax department is working in a fair manner and protecting its rights. My personal belief is that, a lot of people talk about simplifying tax laws. It is extremely difficult to simplify tax laws in a country as complex as India. I don't think the tax laws beyond a point can be simplified. What can be simplified is the manner in which the tax laws are implemented. And today you have technology with you. You can use technology to bring about transparency in the entire tax administration as to how much addition is made and how much is finally sustained. If these statistics are put on the website of the department and all, one would know which person is doing what, not at an individual level, not at a company level, but you can use technology to bring about transparency and improve the manner in which the administration is done of the tax laws, and not in an adversarial manner where, you right now are afraid, taxpayers are afraid to even come up with a voluntary disclosure because everything that is disclosed is to be looked upon with suspicion. I think that needs to be changed. I would like to just say that, this budget has not been, it's a good thing that the budget has not been with an eye on elections. And at the macro level, I think a lot of good thrust has been done to, give this infrastructure boost and all that. I would have hoped that at the tax level also these things would have been translated. At that level, the budget has not really delivered. At the macro level, it has been a good budget according.
Okay,
May I add one point?
Yes,
Sonal, if it is possible?
I was actually going to come to you when macro was mentioned here.
Yeah, actually, one thing I want to add to Mr. Contractor's claims. I think we are all salaried class and we all live in eternal hope every year. This year, I mean, live in eternal hope, but we understand the compulsions of the government given the fiscal constant. But let me just put out one data. I think the GST collections have steadily moved up. Even during pandemic, they have consistently crossed 1 lakh crores. I think the GST regime, which was introduced and had large complexities, is now delivering because most of the loopholes have been plugged. So, and the government has clearly said that the threshold level is 1.5 lakh crores. So if this threshold goes to 1.6 or maybe 1.7 lakh crores over the course of next year, I think the salaried class income taxpayers could look up with some hope in terms of adjustment in their taxes, because that's the only way which we can get some adjustment if the tax base broadens. And I hope that these GST collections actually goes up over a point of time, the same thing which has happened basically to the direct taxes. So I think that's one way of looking into the positive aspect from this budget.
I think all of us would be sure about one thing, that all of us want, not only from a macro perspective or a fiscal perspective, is some relief as far as taxes are concerned. Since Mr. Ghosh mentioned, all of us are salaried class, most of us I would mention, not all of us. But yeah, that is something that everyone would be watching out for. But definitely you made those points, Mr. Ghosh, and follow up on that as well. And that is one of the questions from one of the attendees as well. It's Mr. Pranav, who's asking, higher inflation. We have seen now US Fed has hinted at a rate hike, but there was no even a hint of rate hikes in the recent RBI monetary policy outcome. It was as hawkish as possible. What do you think would be the outcome, and what kind of rate hikes are you expecting to control inflation as far as our own economy is concerned?
No, I think here I will make 2 points. One is one of hope and one is from data. The hope is that the past history shows that whenever oil prices crossed 100, they also crashed subsequently. This was the case in 2018. If you remember, they touched 86 and crossed up to below 30. So I hope that again they crosses 100 and then it crashes. So that's the hope. But as far as the data is concerned, I think one need to understand that the RBI has made a clear distinction in the policy regarding the policy strategy and policy stance. Policy strategy means basically keeping liquidity, adjusting liquidity over a point of time, so that there is better transmission in the money market and the other GSEC rates. The other thing is the policy stance, which means basically whether you want to increase the rates from changing from accommodative to neutral. And the RBI has given clear hints that it would like to play more with the strategy than with the stance, because as long as it serves the purpose. Because I think the strategy has served the purpose of the RBI significantly in the last 2 years. As all of us know, monetary policy has very long and variable lags, but it is perhaps for the first time that when the RBI has cut the repo rate, the banks' rates also have been cut immediately because of the external benchmark. So we need to remember these things, and therefore, I am not sure about a rate hike, but I am sure that the RBI will continue to modulate liquidity in such a manner that the rates get adjusted automatically as per the market forces.
Okay, hope is a great thing, right? And that is something we all are looking forward to, and looking forward to the future as well. Mr. Contractor, Mr. Choksey, Mr. Ghosh, it was a very interesting discussion, and we really got to know, and it was a great troika of what the taxation laws would be, what the markets would be, what would the impact on the macroeconomy be as well. Thank you so much for joining us. So as well, Mr. Contractor, some improvement and some more humane approach as far as taxation is concerned. Mr. Choksey, as bullish as ever on the Indian economy and growth. And thank you, Mr. Ghosh, as well, for all your explanations as far as the macroeconomics is concerned. With that, I would hand it back to you, Vishesh, and the team. That's it from my side.
Yes. Sonal, before I hand it over to Hardik for the final vote of thanks, as a closing commentator, let me take this my prerogative of asking one small question to Mr. Ghosh. And that is that, Mr. Ghosh, there has been a significant emphasis on the cap expenditure in this budget. Before the budget was actually announced, we heard a lot of economists say that this is a time, difficult times on account of the pandemic, and even an earlier worsening situation, that one needs to put more cash in the hands of people. Now, when a finance minister, of course, has a limited maneuverability, what would you really recommend in the sense that whether capex or in these times a more humane approach of putting more money in the hands of consumers for a demand push? Because when I learned economists way back 20-25 years ago, we all said that yes, capital expenditure, everything is fine because it then improves an economy in the long run, but in the long run most of us are dead. So therefore, would it not be better to balance this by something more into the hands of the consumers? Your take on it before I just give a couple of minutes on concluding remarks.
No, thank you. Thank you for the question. And if you ask me very honestly, I would agree with the fact of capital expenditure push in the budget. But at the same point of time, I mentioned in the course of my discussion that maybe some amount of the adjustments on in terms of fiscal policy being more compassionate. So I would not exactly calling more money in the hands of the people, but if you cut, say, GST for a period of time, if you give some waivers, for example, the government of Gujarat has given out waivers for a period of 12 months, I think, for the farms which are shut down. That also actually saves a lot of money. So maybe some amount of tax concessions in the form of GST and other things could have been given. And my hope is that the government has kept the option open of increasing the Nariga, so that if there is any other adverse news happens, that could happen in the course of next year. But yes, I think some sort of an fiscal policy adjustment could have been better combined with the capital expenditure push which the government has given in the budget.
Thank you, Mr. Ghosh, for enlightening us. Before my closing comments, we have had a lovely discussion, a 360-degree one, on all the aspects of the budget. Shariq expressed concern about retrospectivity, retroactivity, and was a little critical of the government on regard to the amendments in the charitable trusts. And he also said that the good news was that there was no news and there were a lesser number of amendments. Mr. Ghosh has given us a real idea and an insight on how off-balance sheet items have now found their way into the budget. Inflation, yes, it remains a concern, at least to a limited extent. And the aspect of reducing imports from China was something of an eye-opener. We had not realized that would also have an impact. Mr. Choksey, as usual, pointed out that the transparency in the finance bill was welcome, and what held out hope was large liquidity in the global markets, which might then trickle into the Indian markets, leading into some degree of buoyancy. Let's hope that happens. He also said that the LIC IPO, his comments were well taken. We have had, as I said, a brilliant discussion and possibly a precursor of more like this to come. With this, we are just touching 7. So I would give it now to Hardik to propose a vote of thanks and close this session. Yes, Hardik.
Very good evening to all of you. As I think, Anil sir said that the panelist, Mr. Ghosh, Mr. Contractor, and Mr. Choksey gave a holistic perspective of how one can put budget, economy, and capital markets together. They gave Mr. Contractor gave us the bird's eye view in summary of all the amendments in the budget. Mr. Ghosh beautifully explained what the RBI SAC is on the digital rupee, the virtual currency, which is going to be unveiled, and how inflation is going to have some knee-jerk reactions, or can do some knee-jerk reactions for money markets. And as usual, Mr. Choksey gave us the vision for the markets, that how it can have how the economy moving from 3 trillion to 5 trillion have a rippling effect on the capitalization of the Indian markets. I think at the start when Mr. Choksey said that Mr. Contractor and Mr. Ghosh was Ishan Kishan and Rohit Sharma, I would say it was like Rohit Sharma, Ishan Kishan, and Virat Kohli who were trying to put all the deliveries out of the stadium. And Ms. Bhutra, a very able moderator to get out so much of answers from all 3 panelists. I would say she was the captain, like Miss Raj, right, of it is, and that's how we were all enlightened by your wisdom on the subject. On behalf of BCAS, all the participants at Zoom platform, YouTube Live, I would like to propose a hearty vote of thanks with a virtual applause for all the panelists and the moderator. Thanks a lot for enlightening us. Thank you. Thanks a lot.
Thank you. Thank you, all of you. Thank you, Son.
Thank you very much.
Thank you so much.
Thank you, all of you.
Thank you.
Thank you.
Thank you, everyone.